Next time you are hovering your finger over the buy button, do me a favor. Stop. Put your other hand on your neck and check your pulse. Notice your breathing. If your heart is beating like a hummingbird trapped in a coffee can, or your palms are sweating, or you feel a sudden, thrilling rush of electricity in your chest, you are doing it completely wrong. In fact, if you feel anything at all, you are mathematically guaranteed to lose your money. It is not your fault. You were set up. You were born into a financial system that operates like a giant, neon-lit casino masquerading as a serious institution, and you were handed a piece of black glass that gamifies your life savings. Of course your heart is pounding. Every piece of media, every movie about Wall Street, and every 19-year-old guru screaming from a rented sports car has trained you to believe that trading is an adrenaline sport. They sold you the idea that trading is about being a highly caffeinated sniper, outsmarting the global elite, and feeling the absolute rush of a massive win. They lied. That biological reaction you feel, that tightness in your chest, is not the feeling of an impending financial victory. It is your body realizing that you do not trust your own strategy. You are not executing a calculated business decision. You are pulling the lever on a digital slot machine. Real, profitable trading is the exact opposite of everything you have been sold. It is not exciting. It does not feel good. In fact, the ultimate sign that you have crossed the threshold from a struggling amateur donating your paycheck to the market to a consistently profitable trader is the complete and total death of emotion. You stop feeling the highs. You stop feeling the lows. You enter a state of radical, boring clarity. Let us walk through the deeply quiet, bizarrely emotionless signs that you have finally become profitable. The first thing to die is the flinch. You know the flinch. It is that paralyzing 5-minute window where your setup perfectly aligns on the screen, but you just sit there, staring at it. You second-guess the trend. You check a news website just to be safe. You wonder if the market makers are watching you specifically, waiting for you to click buy so they can immediately crash the global economy just to take your $50. By the time you finally gather the courage to click the button, the move is already over. You bought the absolute top, a very confident mistake. This hesitation is entirely logical. You have been taught your whole life that being wrong is bad. A failing grade in school is bad. Making a mistake at work gets you fired. So, you treat this single trade as a life or death judgment on your intelligence. But a profitable trader operates in a completely different reality. When they see their setup, there is zero hesitation. The finger clicks the mouse. No sweat. No deep breath. They do not flinch because they do not care about this specific trade. They stopped viewing trades as individual events years ago. They view their trades in blocks of 100. They know their mathematical edge means they will lose 40 of those trades, and they have already made peace with it. The money they risk on this one trade is already gone in their mind. It was budgeted for death the moment the day began. You cannot fear an outcome that you have already fully accepted. I do not say this to be mean. I say it because I have seen the math. I didn't learn about trading from a teenager on the internet. I learned it by quietly watching adults lose their money. When I worked as a prop firm data analyst, I had back-end access to the servers. I analyzed the raw data of thousands of funded traders to find the exact mathematical difference between the 1% who actually get payouts and the 99% who blow their accounts. I took all that classified data and put it into a book. No fluff, just the unrestricted numbers. Inside, you get the exact stats of the top 4,000 traders, their actual win rates, their risk to reward, their daily loss limits, and their profit factors. More importantly, it gives you the mechanical rules to physically force patience, control your fear, and stop your urge to overtrade dead in its tracks. It is a step-by-step survival guide for your psychology. The link to the book is in the description. Mechanize your mind and stop donating your money to the market. The next thing you will notice is the chart. If I look at a beginner's screen right now, it usually looks like a laser light show at a cheap nightclub. There are purple moving averages, blue momentum lines, relative strength indicators, and complex retracements drawn from the top of last week to the bottom of some random Tuesday in 2014. You add all of this because you think it gives you precision. You think more data equals a safer entry. You add another moving average to the chart, hoping it will finally whisper the secret of the universe. It just draws another line. Complexity is just a hiding place for fear. When you have 15 indicators on your screen, you always have a scapegoat. When the trade inevitably blows up in your face, you do not have to blame your own poor discipline. You can point at the screen and say, "The blue line crossed the red line too early," It wasn't your fault. The computer lied. A profitable trader's screen is embarrassingly naked. Just candles and volume. Maybe one line. Their strategy is so violently simple that they could draw the entire plan on a dirty napkin and explain it to a bored 14-year-old in under 2 minutes. If the market goes above this box, I buy. If it falls below this line, I sell. That is it. Simplicity forces accountability. When you have no indicators to blame, you are forced to look in the mirror. If you took a stupid trade, it was just you. Stripping away the noise is how you stop lying to yourself. Then comes the most disappointing realization of all. The death of joy. Think about how you would react if you woke up tomorrow and closed a trade for $5,000 of pure profit. Most people imagine themselves jumping out of the chair, pumping their fists, maybe screaming a little bit, and immediately texting their friends. It feels amazing. It feels like you just cracked the code of reality. A profitable trader closes that exact same $5,000 trade, and their face looks like they are waiting in line at the post office. Their heart rate is completely flat. They feel absolutely nothing. This sounds miserable, but it is deeply necessary. Why do amateurs celebrate a winning trade? Because they are surprised. Excitement is the biological response to an unexpected positive event. If you are excited you won, it means deep down, you feel like you got lucky. To a professional, a winning trade is not luck. It is just math doing exactly what the math was supposed to do. If you drop an apple, you are not shocked and thrilled when it hits the floor. You expected it to. Gravity did its job. When a pro's edge plays out, they expect it to. You have to actually grieve the loss of the casino high. One of the hardest parts of becoming consistently profitable is going through literal dopamine withdrawal. Trading stops being fun. It becomes a repetitive, deeply boring factory job. If you want thrills, go jump out of an airplane. If you want to build wealth, your daily routine needs to be as boring as watching wet paint turn into dry paint. Because it is so boring, profitable traders develop what we can call the ghost protocol. The absolute fastest way to destroy a good trade is to sit in your chair and stare at it while it is happening. An amateur will enter a position, and then they will sit there for 3 hours. They watch every single 1-minute candle. They talk to the screen. They bargain with God. The price drops slightly, panic sets in, and they manually drag their stop loss down just a little bit to give it breathing room. Then it drops more, and they drag it again. By the end of the day, their small, calculated risk has turned into a massive, account-destroying catastrophe. They do this because they view a stop loss as an insult. They feel attacked by the market. Profitable traders understand basic business. A stop loss is not an insult. It is exactly like a grocery store owner buying inventory. The owner buys milk, knowing some of it will spoil before it sells. The spoiled milk is not a personal failure. It is just the cost of doing business. You cannot run a business without expenses. So, the pro executes the ghost protocol. They click buy. They place their hard stop loss to define their business expense. They place their take profit to define their revenue. And then, they physically stand up and leave the room. They go make a sandwich. They walk the dog. They stare out a window. They let the market do all the heavy lifting, completely immune to whatever happens first. They refuse to be in the room to let their human emotions ruin a perfectly good mathematical setup. This physical distance naturally cures the next massive disease, the fear of missing out. Imagine opening your phone and seeing a massive, towering green candle on a chart. The asset just pumped 500% in an hour. Your friends are making money. Strangers on the internet are posting screenshots of their massive gains. You are not in the trade. The amateur feels physical pain in their stomach. They feel left behind. This pain drives them to do something incredibly destructive. They frantically buy at the absolute top of that giant green candle, just desperately wanting to be part of the winning team. 5 minutes later, the price crashes, and they are left holding the heavy bag for everyone else who bought early. The profitable trader sees that same giant green candle. They see everyone getting rich. They calmly look at their rulebook. They realize their specific entry criteria was never actually met. The market just did something random. They shrug. They close the app. They have total, monk-like immunity to outcomes that were not in their playbook. If a stock pumps 1,000%, but it didn't give them their exact, boring little entry signal, they do not care. That money was never theirs to begin with. Let the gamblers have it. Realizing you missed a massive move and feeling zero regret is the quietest, most powerful flex in the financial world. It brings us to the final, gentle reality of this entire game, the daily anchor. Every morning, before the market opens, a profitable trader does not look in the mirror and chant about getting rich. They do not hype themselves up to conquer the world. They repeat one very simple, slightly depressing phrase. It is better to miss a good trade than to take a bad trade. That is it. That is the secret. Taking a sloppy, impulsive trade that accidentally makes money is the absolute worst thing that can happen to you. It rewards bad behavior. It teaches your brain that you can break the rules and still get paid. That single bad habit will eventually grow like a weed and burn your entire account to the ground. But missing a great trade? That just means you kept your money safe. It means your discipline is perfectly intact. You do not need another indicator, you need adult supervision. You need forced discipline, which is exactly what the Alpha Equity Manager does. It is essentially a digital bouncer for your brokerage account. Let's say you set your maximum daily loss to 2%. You take a trade, the market spikes against you, and your floating loss hits exactly -2%. The software takes over. It aggressively market closes every single open position to protect your money. Then, it completely disables your buy and sell buttons for the rest of the day. You are physically locked out. And if your heart is pounding, and you think you can just go into the settings to change that limit to 3% so you can revenge trade, you cannot. The software has a time-locked vault. It instantly rejects your emotional inputs. It does not negotiate with terrorists, and it will not let you cheat. It even calculates your exact dollar risk before you enter the trade, removing all the dangerous guesswork. The link to download the Alpha Equity Manager is in the description. Stop trusting your emotions, and finally trade like a machine. Because you were born into a machine designed to take your money by hacking your emotions. The flashing lights, the red and green colors, the endless feeds of fake success. It is all built to make you act quickly, out of fear or out of greed. The only way to beat a machine is to become slightly less human yourself. You have to let the excitement die. You have to let the fear die. You have to accept the boring, repetitive nature of a simple edge executed perfectly, day after day, year after year. It isn't glamorous. Nobody is going to make a movie about you sitting quietly at a desk, drinking lukewarm water, and choosing to do absolutely nothing because the market didn't look right today. But when you finally stop trying to be the hero, and you finally let the boredom wash over you, you will notice something funny. Your account balance will finally start going up, and you will be too calm to even care.